All right, guys. Very good morning. How are you doing? Yeah. Okay. So there were some technical glitches. We just set it right and we're just starting maybe like 10 minutes late. Sorry about that. Let's begin. We always have to give in to the perils of technology, right? Though technology has connected us, but sometimes it will disconnect us also. Right. Okay. So in yesterday's class, as Hemnath already mentioned, we already have done chapter 1 to chapter 5. So I was thinking that, rather than with the limited 6 hours of time, it is impossible to cover everything. So what we thought was, rather than just doing bits and pieces of everything, why not do everything in company law and touch upon all the chapters? That is what I thought, because each and every chapter is quite important. If you want to see the chapter wise thing, yesterday what we discussed was preliminary. We discussed the incorporation of company, we did prospectus and allotment, public offer, private placement, share capital and debentures, and we just did a little bit of deposits. So today, my dear friends, is going to be very important, because we will be doing charges, and more importantly, we will be doing those chapters which, as far as weightage is concerned, both in auditing as well as law, the weightage is very high. So what is that? We will be discussing the management and administration chapter, which is all about your meetings, etc. And of course, the declaration and payment of dividend, accounts of companies, and auditors. Now, all these are extremely important areas in our examination, and definitely questions will come. Not only, mind you, not only in the law subject, but also auditing. Even in auditing, they will ask you, especially from chapter number 8, 9 and 10, declaration of dividend, and especially accounts of companies and audit and auditors. The same chapters are there as well. So this to some extent will also help you definitely very much in your auditing as well. Apart from that, if you see, share capital and debenture chapters also are very important. If you see the weightage, analyze the previous year's question papers, the weightage wise, as I told you, share capital and debentures, though I told you yesterday, I'm just repeating, management and administration, declaration and payment of dividend, accounts of companies and auditors. These are extremely important. I'm not saying others are not important. Others are also very important. But what I'm saying is, if you take the bulk weightage, so at least a simple majority, if you take over 50%, would come from all these areas, and the remaining 50% would come from other things, obviously. Apart from that, why I consider accounts, audit, and payment of dividend also important is because apart from law, as I told you, they'll also ask in auditing. So with that, let us go ahead. So since it was just 6 hours, I thought rather than doing contract act, negotiable, which is also very important, which will come for around 40 marks, and general clause, etc., we can, that can be managed somehow, because you can, go through somewhere, you already have studied, etc. But company law, a thorough revision was what was really needed, because see, in a normal revision session, it's better to cover, a major area. A major area for us obviously would be company law. So that's what I thought we could do. So on that small note, let us now begin, my dear friends, shall we? So yesterday we had done the deposits, etc. So as I told you, I have my chart book, which 35 sheets we did yesterday. Now today we'll have to do from the remaining 36 sheets is what we have to check. So I'll just come to this charges chapter. Come to the charges chapter, chapter number 6, that is registration of charge. Now, what do you mean by a charge? Very simple. When you as a company, have issued, let's say, debentures, to the public, and the debentures will have a right over the asset, right? Or the debenture holders will have a right over the asset. That is one. Second, if you as a company have taken loan from some bank or financial institution or for somebody, or from somebody, whoever it may be, that person will obviously simply not give a loan just like that. He will ask you something, and that something is called as, he will ask you for a security. So obviously you will give him a security, a fixed assets you will give, or the current assets of the company, that is a stock of the company especially, will be handed over. Handed over may not be physically, but also symbolically. Now that legal term where a lender will have a charge over, or rather a right over the asset of the company is called as the charge. As simple as that. If he has the right over the asset of the company, it is called as a charge. That's all there is to it. So on that note, let us begin, my dear friends. Charges. So a charge means a security given for what? A charge means a security given for securing loans or debentures by way of mortgage on the assets of the company. Correct? So mortgage is generally done on immovable property. Then you have many other things like normal guarantee. Now, basically guarantee will not come here because guarantee does not involve any transfer of asset. So here this mortgage, it is given as a collateral. It is given as a collateral. Then you would have heard about hypothecation also. In hypothecation, the physical transfer of goods will not happen. Nevertheless, you will be giving the goods to some other person in a symbolic way. You would have seen, no, on the road when you go, you would have seen any auto. If it's there behind the auto, you would have written, this auto is hypothecated to Canara Bank, which means the auto driver can still drive the auto. So if I go and say, take me to some other area, I will not call up the bank manager and say, sir, can I take? He will definitely take. But the control of that asset will be with the bank, because bank would have advanced some money, or bank would have bought that auto for that person. So until the loan is subsisting, the charge will now come from the bank on that asset. Now that asset is called hypothecation because it's a movable good. On the other hand, here predominantly, though there are charges for both fixed assets and current assets, but predominantly here charge is like a lien or a security given, whatever the case may be. So if you see 2 clause 16 defines charges, means an interest or lien created on the property or assets of the company. It includes a mortgage. So charge, there are two types of charges, my dear friends. One is floating charge, one more is fixed or specific charge. So floating charge is generally on a class of assets, and predominantly floating charges is on movable property, but nothing stops it from making a floating charge on immovable property also. Sorry, on immovable property also, but nevertheless generally it is on movable property. Fixed or specific charge, it is over what? Ascertained assets, especially like land and building, plant and machinery, predominantly on fixed assets. Predominantly on fixed assets. That is called fixed or specific charge. Very, very simple. Now, the thing is here, if you see, here, a floating charge created within 12 months immediately preceding the commencement of winding up shall be invalid. Why? Because guys, the people will know that they are going for winding up. The directors, let's say, will know that they are going for winding up in next 7-8 months. So they'll call one creditor who they'll feel that will create a problem later. So to ensure that he is satisfied, I will create a charge today, a floating charge. So all that would be void unless what? It is proved that the company is insolvent immediately after the creation of the charge. So generally it is invalid, but if you can prove that the company was anyway insolvent, then there's a liquidation proceedings that you leave. So basically you cannot create a charge within 12 months immediately preceding the commencement of the winding up. Now this floating charge can also be what? Converted to fixed charge. Floating charge can also be converted to fixed charge. We will see that. So that conversion of floating charge into fixed charge is called as crystallization. So crystallization is the concept of conversion of floating charge into fixed charge. So what are the circumstances under which it can happen? One example they can give you like 2-3 marks. How is it? If the company goes into liquidation, the floating charge will convert to fixed charge. Second, if company ceases to carry on any business, generally they would have taken money for some business only stops. Then in that case, the floating charge will get converted to what? Fixed charge. Creditors or debt holders take steps to enforce their security on the happening of an event in the deed. So in the entire loan agreement, there will be an event. Event could be anything. And if that event happens, the creditors or debt holders will take steps to enforce their security. Means what? They will say, boss, this thing, whatever was written in the deed has happened, so I'm going to enforce my security. Please give me back my money. Otherwise, I'm going to sell this asset. That's called enforcing security. In those cases, floating charge will be converted to fixed charge. That's what they're trying to tell. So in banking terms, generally when you take a loan from a bank, I'm just saying floating charge and fixed charge. Floating charge depends on the RBI rate. So generally floating charge means whenever your repo rates keep changing, no, the floating charge also changes, especially in a housing loan. Fixed charge, they will only consider all the plus and minus, and they'll give you a fixed, rate. Whereas in a floating rate, it depends on the repo rate and many other market factors. So if the market is doing really well, the rates, and if the government RBI decreases the repo rate, etc., the interest rate also may come down. So it depends on various factors. I'm just talking about normal, in business normal terms is what I'm trying to tell. Anyway. So application of registration of charge by charge holder when a company fails to register a charge. So guys, every company has to register a charge. Mind you, every company undoubtedly has to register a charge. So they have to register a charge where? They have to register the charge with the ROC. So you have to file a form, you have to register the charge. There is no second thought about it. So if you see, where a company, who should register the charge? Company should register the charge. So basically, if company has taken a loan from someone, they have to immediately go to the ROC and register that particular charge. Now, where a company fails to register that charge, then what happens? Then the person in whose favor the charge is created, means the lender. Person in whose favor the charge is created means the lender. He may apply to the ROC for registration in CHG1 or CHG9. So CHG1 is for normal things, CHG9 is for your debentures. He will have to apply to register the charge. So guys, the first important thing is who should register a charge? It has to be the, company. But if the company fails to do so, then the, the person in whose favor the charge is created, he has to register the charge. Very, very simple. Now, registration certificate. Once you register the charge, a registration certificate will be given by whom? By ROC. ROC to issue certificate of registration in CHG2. CHG2 is what? Registration of charge. CHG3 is modification of charge. That charge, if you want to modify, where new parties are added, rate of interest, decrease, increase, whatever, then you have to file one more modification of charge called CHG3. Or if you are the first charge holder and somebody else, let's say the value of the property is around 80 crore, you have given a 20 crore loan, but you have a charge over the 80 crore asset. You are the first charge holder. Now second charge holder will come because he also would have given a 5 crore loan. Since I have 80 crores, the property value is 80 crore, I can take multiple loans on that, right? So second fellow, if he comes, that is called as a second charge holder. Everything you should clearly mention to him saying that once I sell the asset, the first rupee will go to the first charge holder. Then if anything remains, then it will come to you. But generally second charge holders also will get money because the property value will be way, way more than the loan that the combined loan given by both the first charge holder and the second charge holder. Okay. Yes. So the registration of charge CHG2 and the modification of charge CHG3. Now satisfaction of charge is what we'll see that. Before that, so the person whose favor charge is created, CHG1 or CHG9, ROC may give notice to the company. Company may either itself register the charge or show sufficient cause to why the charge should be registered immediately, and then ROC may allow registration within 14 days after giving notice to the company. So ROC themselves can give notice to the company saying that, boss, please register the charge because somebody else has come now, please register it, and after due consideration within 14 days they will register the charge. Registration for charge to be recovered from the company. The fee obviously should be recovered from the company is what they say. Now, once the charge is created, once everything is done, towards the end, let us say the lender is repaid fully. Full repayment I'll do. Full repayment I'll do. Full, complete repayment I will do. So the company will come and say, boss, I have done the complete repayment now. Now you do not have any right over the asset. Lender says 100%, I do not have any right over the asset. So the company says, in that case, let us file to the ROC saying that the charge has been completely satisfied. Charge has been completely satisfied. So favorite question the examiner is, one is what is crystallization of floating charge? Second one is this, what do you mean by satisfaction of charge? The company shall give intimation to the ROC of the payment made within 30 days in form number CHG4. So in CHG4 they will give the intimation to the ROC. ROC shall issue a notice to the holder of the charge. ROC will then ask the lender, sir, the company is telling that the charge is completed. The company is telling that they have already paid. Is it true or not? If you say yes, sir, it is true, then there ends the matter. If no reply is received, ROC will enter in its register and charge will be deemed to be satisfied. Imagine, you need to positively reply saying that yes, or basically even if you don't want to tell yes, you can be silent. But if you want to tell no, where you still have to get money, you have to immediately reply. If you don't reply, the charge will be deemed to be satisfied. The same shall be informed to the company also that the charge has been satisfied, is what they say. Then ROC will maintain a register of charges, that is as per section 81. It shall keep a register containing particulars of the charges registered. Particulars of charges maintained on MCA portal shall be deemed to be the register under charges under 81. So if you go to MCA website, Ministry of Corporate Affairs, you will, the portal, if you see, there will be all the charges against that particular company. That itself will be deemed to be the register of charges, register of charges. So maintained by the registrar. Okay. So such register shall be open to inspection by any person on payment of fee. On MCA portal, you can actually go and download many reports. Now recently only I did an analysis of Bytes financial statements, which is on my YouTube channel. So there, of course, so you will see that I also go enter to the MCA portal and downloaded the form. So guys, MOA, AOA, your MGT7, AOC4, all these forms are there for public consumption. It's there for the public. It is open to the public, of course, but you need to pay a fee. Once you pay a fee, you will get all these documents, no problem, whatever is filed with them. So where any charge exists on any person acquires such property, assets or undertaking, then property or assets of the company, such person shall be deemed to have notice of the charge. So which means, as I told you, 80 crore property, one fellow has already given 20 crore. Now I am giving 5 crore. When I am giving 5 crore, I want the, charge on that particular company, on the assets of the company, 80 crore assets. But already one person is already the first charge holder. Now, should I not go to the company's register, or the MCA portal and check whether this charge has been registered against that person? Yes. So basically here they are trying to tell, it is the duty of the second lender to ensure that the company has registered the first charge. He should already know that the asset has already been registered as a first charge holder by somebody else. If you do not do the checking, etc., the law says it is deemed that you already knew about it. So here the onus of checking about the chargeability or whether the charge is there or not purely falls on whom? On the second charge holder. Falls on the second charge holder. That's what they are trying to tell. Section number 80, deemed notice of charge. Now, if you do not pay, company does not pay the money, so the lender will enforce the charge. When he is enforcing the charge, he can come and take over the asset. Who will take over the asset? Will the person only come, lender? No, he will appoint a person called as receiver. He will appoint a person called as receiver. So, if any person obtains an order for the appointment of a receiver, section 84 will apply. This is for receiver. So, notice given to the company and the ROC within 30 days from the date of passing of the order or making of the appointment, such person shall give notice of appointment to the company and ROC. So the moment a receiver has been appointed, immediately under section 84, you should give a notice to the company as well as the ROC saying that I'm going to come and take over the assets of the company. Then you should register. The ROC shall register the particulars of the receiver, person or instrument in register of charges on the appointment as well as on cessation. So not only at the point of appointment, or only also when that person is no longer the receiver, that also that seizure also will be recorded carefully. Power of the registrar to record satisfaction of charge. Power of the registrar to record satisfaction of charge given in section 83. So if the registrar is satisfied on the basis of evidence produced before him that in relation to a registered charge, the debt has been repaid in full. Yes, so when I produce evidence, that's called power of, I told you, satisfaction of charge can come in the exam here, which I've already discussed. Similarly, this is the extra procedure under section 83, what all you should do. The moment registrar is satisfied based on the evidence produced, you cannot just go to him and say, sir, I've already paid. They'll say, show me proof. If he is satisfied with the proof that the debt has been prepaid in full, which means all the entire details you should give, the check, the bank passbook where you have, actually paid, and that person's passbook also, the credit message, all that you should show. The property charge has been released from the charge means what? You have only waived off your right. You'll say, I don't want to have a right over this asset anymore. That should be in writing. Or property charge has ceased to be the property of the company. Company has already sold off that property. Or let's say the company is destroyed now. The asset is destroyed. And the asset only is destroyed. Is it actually the property of the company anymore? No. Insurance claim is also cannot be done, assume. So then in that case, of course, what will I have? I will have no right over the asset. So I'll have to go and register the satisfaction of charge. Then the registrar may record the satisfaction of charge in the register of charges maintained by him. Notwithstanding the fact that no intimation of satisfaction has been given to him by the company. Doesn't matter if the company has given or not a notice, but he has to go ahead and record the satisfaction of charge. So that is regarding power of registrar to record satisfaction of charge under section 83. Punishment for contravention. If the company contravenes any of the provision of charges with respect to registration from 77 to 85, any of the provisions, the company shall be punishable with a penalty. Mind you guys, penalty is paid by whom? Penalty is paid by whom? Penalty is paid by to the internal adjudicating authority, that is the ROC itself. We have discussed that yesterday, difference between fine and penalty. The penalty will be how much? 5 lakh rupees. Notice to the parties. Within 30 days of recording satisfaction of charge in the register of charges, the registrar shall inform the affected parties regarding recording of satisfaction of charge. So within 30 days of recording the satisfaction of charge, what will happen? The registrar shall inform the affected parties regarding the satisfaction, saying that yes, it has come to an end now. The charge has come to an end. Punishment for every officer in default. Same. This is for the company. Company, how much should they pay? 5 lakhs. How much should every officer in default pay? The company secretary and anybody who is in the legal team who has to ensure that all this compliance team, basically 50,000 rupees for him penalty. Deadly. Just a sec. One second, guys. Hold on. Fine. Got it? So that is about it. Very, very simple. Very, very simple provision. Moving on. There. Power of CG to extend the time for giving information or satisfaction of charge and to order satisfaction of charge, rectification of any omission or misstatement. So this concept of section 87, can I ask for rectification? Can I ask for rectification? We'll come to that. Willful default, if there's a willful default, automatically it comes to 447, goes without saying. This part I'll come because I have to explain the charge creation. So guys, before 2nd November 2018, what was the procedure? I'll just tell you. Charge is created. Within 30 days, I had to register a charge in CHG1 with fee. If the charge is not created along with the fee, I would have got 300 days. 300 days. ROC may allow the registration. So initially we should register within how many days? 30 days. Let's say you did not do it. If you did not do it, you had not 1, not 2, but 300 days to register the charge with, of course, with something called additional fee. Additional fee. Now, if that entire thing, it said may allow, that entire thing was deleted, and on 2nd November 2018, things changed. Now, what was that? You leave it. This part you leave. This is what is relevant for us. Anything that has been created after 2nd November 2018. So for the examination purpose, this is what they will give you anyway. After 2nd November 2018. Here. Charge has been created within 30 days. You have to file CHG1 with the fee. If you don't do, see earlier it was 300 days. No, now I made it 60 days. Within 60 days, ROC may allow with additional fee registration of charge. Registration of charge. Now, if that also is not done, let's say is allowed. Within 60 days is allowed, you have not done properly. Documents have not been filed. So again, one more additional 60 days can be given, but here the fee will be based on the value of the asset. That's called ad valorem fee. Ad valorem fee means what? Based on the asset. Ad valorem, right? Ad valorem means based on the asset it will be. Based on the asset you will have to pay deadly. So basically you have to pay purely based on what? Based on the asset of the company. Based on the asset you need to pay. So it's not going to be easy. It is going to be based on the asset. So it's not going to be some simple thing. You have to pay based on the value of the asset. Now, why I did not do the previous chart, I'll tell you here. If you see earlier, before 2018, this amendment came. Before that, you could have, if you did not register the charge on time, even within 300 days, if you could not do it, you can go to the ROC and begging, saying that, sir, sorry, I forgot, please, excuse me, and all those things. Now, that, my dear friends, is called as condonation. Condone means what? To pardon. So you could have gone to the ROC and sought pardon if you did not register the charge. That entire thing has been deleted now. If you do not register the charge, you cannot apply for condonation. I repeat, if you do not register the charge, you cannot apply for condonation. Very, very simple. No condonation is ever possible if you do not register the charge. So charge has to be registered, charge has to be created. Now come, so then in that case, condonation is no longer for registration of charge. Condonation is for what all? This is what it is, section 87. This is also important. Condonation of delay. If there is any omission to give intimation of payment or satisfaction of charge. Yes. Earlier it was what, guys? Creation of charge. If you did not create a charge, you could go and ask for pardon. But here no pardoning will be given for non-creation of charge. But you can pardon if you already have repaid the amount, but then you forgot to inform the ROC. You have repaid the amount but forgot to inform the ROC. In that case, you can go omission to give intimation of payment of what? Satisfaction of charge. Second, there is some omission or misstatement in any particulars of a filing. While registering the charge, you have omitted some details. While registering the charge, you have, while modifying the charge, you have omitted some details. While satisfying the charge, you have omitted some details. In all these cases, what will happen? Section 87 will come. You can go and ask for condonation, pardon. So these are the two areas. So CG is empowered to make an order that the time for intimation or payment shall be extended. So they can extend it, and CG can say whatever is advantageous they can do. So this part would be important. What are the circumstances under which a charge, holder or a company can be condoned? One, there is an omission to give intimation of satisfaction of charge. Second one is what? There is some omission or misstatement in either creation of charge, modification of charge, or satisfaction of charge. Satisfaction of charge. So I hope you got this, guys. This is all about the charges chapter. So we are done with chapter number 6. Now let's get into the deadly chapters 7, 8, 9, 10. Chapter number 7, management and administration. So let me just change the battery. 1 second. Yeah. Management and administration, section 88 to 122. Section 88. So basically some registers, quickly we'll go through all this. So registers to be maintained by every company. So registers generally they can ask you in the MCQs, and also one not main. Generally they can ask you normal question also, but predominantly the registers etc. can come in the MCQs. So basically guys, members have to maintain the, register of members should be maintained by the company in form number MGT1, each class of equity and preference shares. For debenture holders, form number MGT2, that is what is needed. And you also should maintain an index. If the number of members is 50 or more, an index of the number of members also should be given. Details should be entered and readily it can be found. Time, it should be done simultaneously. All these details should be given. Name of the member, address, PAN, father, mother's name, occupation, status, etc. Place of maintenance. Now this they can generally ask in the MCQ etc. Where should I maintain the register under section 88? The register should be maintained at the company's registered office. If special resolution is passed, then register can be maintained at, now this they can ask in the exam. Generally it should be maintained at the company's registered office, but can I maintain anywhere else? Yes. Where? What resolution I should pass? Special resolution. And yesterday I told you special resolution means what? Greater than or equal to 75% of the, valid votes. At any other place within the city, town, village in which the registered office is situated. So you can either keep it in, let's say your office is in Nungambakkam, Chennai. So you can either keep it in Nungambakkam, Chennai, or you can keep it in any other place in Chennai. You can keep it in Anna Nagar, you can keep it in, Velachery, you can keep it wherever you want. That's what they're trying to tell, in which the registered office is situated. You can keep it in MGM resorts, that ECR MGM resort is there, you can keep it there also. Whenever, wherever you want, you can keep, but for this, what resolution is needed? Special resolution. Or, sir, can I keep it in Bangalore? Registered office is in Chennai, can I keep it in Bangalore is the question. So you see, yes, that's also possible. Any other place in India in which more than 1/10 of the total members entered in the register reside. So if the company has 100 members and let's say 11 people stay in Bangalore, just 11 people, remaining 89 people are staying in Chennai. What is the first rule? It should be maintained in registered office Nungambakkam. Second, can I maintain it in, other places in Chennai? Yes. Third, can I maintain it in Bangalore? It is possible if more than 10%, 1/10 means 10%, more than 10% of the total members are in where? Some other place. If 11 people are there in Bangalore, I can maintain the register in Bangalore also. Got it? So this they can ask in the normal scenario or they can ask as an MCQ as well. Time for entries. When should I enter? This is also MCQ question. Within 7 days of the approval of the board with respect to all these entries. In case of allotment of shares, transfer of shares, forfeiture, etc. When a share is allotted to a new person, within 7 days of the board approval, you should obviously enter that fellow's name in the register of members. Then that is in case of these three: allotment, transfer and forfeiture. Within 15 days from the event, in case of the following: for companies whose securities are listed on a stock exchange, particulars of any pledge, charge, lien. If anybody else has taken pledge, charge or lien, etc., then for listed companies, it should be what? 15 days is what they are trying to tell. Now, section 89 and 90 speaks about the beneficial interest, and 90 speaks about significant beneficial ownership. So guys, many times it so happens that the holder of the shares can be somebody, but the person who gives money to buy the shares can be somebody else. Many of these politicians and etc., they do not hold shares in their own name. They will hold shares in their driver's name, watchman's name, spouse's name, relative's name, etc. So that generally is called as a Benami transaction. That is there in your CA final, but there are exceptions for family members, etc., that you leave. But under section 89, the declaration in respect of beneficial interest should be done. Because of many sham companies opening and because of shareholding being there across various other people, what did the government do? They released a section called 89, which was there before also, and then they added one more section called section 90. 89, declaration in respect of beneficial interest in any share. What do you mean? So basically, if you are a beneficial owner, so who is a beneficial owner? Beneficial owner is a person who holds or acquires a beneficial interest in the shares of the company. Beneficial owner, but shares stand registered in somebody else's name. I give money to you, you buy the shares of the company. Who is the holder of shares? You. Who is the owner? Actually, me. Why? Because all the benefits of that share will come to me. I have a deal with you saying that if the company pays dividend, give it to me. If the voting right is there, you should tell me. I will tell you what to vote. You should tell that only. So beneficial owner is the person who will not give his name, but who will give money, investment, and for whose benefit the shares have been registered, right? That's what there is. Sure. Next. Earlier, they just used to just leave it. Now what they are saying is beneficial owner shall file a declaration to the company. Earlier, it was not possible only. We could to figure out who was the beneficial owner. Now, the burden is on the beneficial owner only. Imagine they are saying beneficial owner, you shall file a declaration to the company without fail. So, apart from that, registered owner also, the person in whose name the shares are. Correct? Basically, I give money to you, you go register. No, you are the registered owner. You also have to file a declaration to the company. Who is the registered owner? Name of the person entered in the register of members of a company as the holder of the shares in that company, but does not hold the beneficial interest in such shares. You do not hold the beneficial interest in such shares. You just are the holder of shares. Very, very simple. When will you file? Within 30 days from the date on which the name is entered in the register of members. Here also within 30 days. And as far as the form is concerned, for registered owner, it is MGT4 in duplicate. And for beneficial owner, it is MGT5. One is MGT4, other one is MGT5. Penalty for non-compliance, registered owner and beneficial owner both have to pay, guys. Penalty 50,000 and 200 rupees per day, maximum 5 lakhs. So when the company, will receive a notification from these two people, both registered owner and beneficial owner. If the company also does not go ahead and register, they also have to pay penalty 1,000 rupees per day. and 2 lakh rupees for officer in default and 5 lakh rupees for the company. So if you see in the above cases, if any change occurs in the beneficial interest to such cases, let's say I now tell this person, I have given you money, right? So I will tell boss, from today don't give it to me, give the money to my spouse. That case there is a change in the beneficial interest. Or I will tell you, I don't want you to hold the shares anymore, you transfer to somebody else. I will get one more person here who will always listen to me. In that case, I also need to file again one declaration of some change to the company within 30 days. And it will be noted in the register. The return has to be filed within 30 days in MGT 6. These are all some normal points. Now here, section number 90 speaks about what? Investigation of beneficial ownership of shares. It talks about normal ownership and significant beneficial ownership as well. So what do you mean by direct holding? If I hold shares in the company directly, that's called direct holding. Indirect holding means what? Indirect holding is this chart. So indirect holding means what? And what is significant beneficial ownership? You should understand, if I want to call anybody a significant beneficial owner, the share holding must be 10%. Mind you, this should be indirect holding. Correct? Indirect holding. I want to hold shares in Infosys. I will not hold it directly. I will hold it through various other people. But if I hold less than 10%, I am called as beneficial owner. If through various entities, if I hold 10%, correct, that is greater than or equal to 10%, I will be called as a beneficial owner. I will be called as beneficial owner. Got it? So guys, 10% is a lot of shares, correct? Even Mukesh Ambani individually doesn't hold 10% in Reliance, honestly. Of course, he controls overall, entire thing he only controls. But what I'm trying to tell is, he will not hold those shares individually more than 10%. Through other entities, yes. That's why it's called directly or what? Indirectly. Let me just adjust the camera 1 second, guys. 1 second, hold on. Yeah, I think now it's fine. Cool. So that is regarding what? Indirect holding. Now what is indirect holding? As I told you, 10%. That is significant holding. Indirect holding means what? Direct holding means I directly own the shares in your company. That's fine. Indirect holding. Now that will become interesting. What do you mean by indirect holding? Let's see. So Mr. A, who's a SBO, he will be called as an SBO if, for example, he holds more than 50% shares in a body corporate. Body corporate means what? Private company, public company, statutory corporation, foreign company, LLP, nationalized bank, financial institution. So this is point number 1. You will be called as a significant beneficial owner, that is Mr. A, if he holds more than 50% in a body corporate. And that body corporate now, here, this is the first one, holds what? Minimum 10% in the reporting company. In my example, reporting company is Infosys. So I have 50%, more than 50% in some random company. And that random company has invested 10% in Infosys. So who is the significant beneficial owner? Me, because I have more than 50% shareholding in that random company that I was talking about. This is point number 1. Point number 2, same. I have more than 50% in the body corporate. The body corporate is a partner in a partnership firm. And that partnership firm has greater than or equal to 10% in the reporting company. There's the second part. Third part, Mr. A, he himself is the partner in the partnership firm. And partnership firm holds minimum 10% in the reporting company. There is point number 3. Point number 4, Mr. A happens to be the Karta of a Hindu undivided family. Hindu undivided family holds minimum 10% in the reporting company. Fifth, this is the fifth one. Mr. A is a trustee in a trust. Mr. A is a trustee in a trust, and that trust holds minimum 10% in the reporting company. 10% in the reporting company. So this is what I am trying to tell. All these things will be called significant beneficial ownership. Significant beneficial ownership. So if you see, what is the test for SBO disclosures? There you go. There should be a natural person. It cannot be a company, it should be a natural person. Individual should have beneficial interest not less than 10% of the shares. Beneficial interest must be there 10%. Individual holding share indirectly or together with direct holding. The individual should be holding the share indirectly and direct. Direct holding I'll ignore. Indirectly should be holding 10%. Basically, direct plus indirect holding should be 10%. If it's only direct holding, no point. Direct holding can be 0 also. Indirect holding can be 10. Both combined. Share capital includes what? Global depository assets, compulsorily convertible debentures, compulsory convertible preference shares, and all those things. Individual should hold majority stake in a member body corporate. I told you in that random company. Only direct holding of shares shall not be considered as SBO. It should be direct as well as indirect holding. Section 91. The register of members will be closed when at least 7 days or a lesser period specified by SEBI for listed companies, and it can be closed for any period, not necessarily not exceeding in the aggregate 45 days in each year. So guys, company shall give a notice if they want to close the register of members, minimum 7 days notice. Second point, how long can the register be closed for? All MCQ question. Register can be closed for 45 days every year, but not exceeding 30 days at any time. So guys, I can do 15, 15, 15, I'm just saying, but overall it cannot exceed 30 at a time. 30 and 15 I can do, 20, 20 I can do, 20, 20, 20 not possible, 20, 20 also not possible actually. Why? 20, 20 and 20 not possible, 20 and 20 possible. Why? It is less than 45. So at a time 30, overall 45. 20 and 25 also possible, 25 and 25 not possible, it will become 50. Got it? Yes. How about 31 and 10? Not possible. Though it is 41 less than 45, 31 only is not possible. No, that's why. Yes, of course, and advertisement shall be given at least once in the vernacular newspaper in the principal place of the district, English language newspaper also, where it is circulated. The notice shall be displayed on the website of the company as well, and of course the liability also is 5,000 per day and all those things. Now, section 92, annual returns. Again, MGT 7 for small company it is MGT 7A. So this form number for small company they have changed it, MGT 7A. Contents of annual return. All these things must be there, guys. Registered office, holding company particulars, shares, debentures, etc. Promoters, directors, and KMP of changes. All changes among them. Meetings of members, remuneration of directors, penalty or punishment imposed by the company, other prescribed parameters. All these things must be clearly mentioned in the annual return, MGT 7. Signature they can ask you, who will sign? Who will sign? Be signed by a director and a company secretary. They can ask you guys, who can sign the annual return? Director will sign, company secretary will sign. For OPC and small company, it will be signed by the company secretary. If not, then signed by the director of the company. But generally, company secretary only will do all this. Then, for listed companies or companies having paid up share capital 10 lakhs, and turnover greater than or equal to 5 crore. For example, Bytes, I have shown you the MGT 7 in that. Yes, in that form number MGT 8, one more form you have to file. Shall be certified by a practicing company secretary. Practicing company secretary. And if the company secretary does not certify, Of course, you will have to pay a penalty. Recently, one of the companies also paid penalty because they did not get the MGT 8 certification. So now it has become utmost important that you do all these things without fail. So that is what annual returns MGT 7. So when should you file, guys? If AGM has been held, this filing also is in 92. If AGM has been held within 60 days from the date of the AGM, you should file your annual return. It's also there in 137, filing of financial statements also. We will see that AOC 4. That also is the same, similar timeline. That is 30 days, but here it's 60 days. This, what I'm saying is everything should be filed together. When I meant in the same, in the timeline of 30 to 60 days, all these things have to be filed. You will see it in 137 AOC 4. That should be filed within 30 days. Here they are saying within 60 days of the AGM under 92. If AGM is held within 60 days from the date of the AGM, if AGM is not held within 60 days from the date on which the AGM should have been held. Correct? So the AGM should be held earliest of the 3 dates which you know in section 96. So you should hold it before that time. Predominantly it will be 30th September only. So you should hold it before that. A statement should be filed containing reasons for not holding the AGM also. The AGM is not held, along with this you should file that as well. Penalty for non-filing of annual returns within the normal time or extended time. Company is liable to how much? Minimum 10,000 and 100 rupees per day. Maximum it can go up to 2 lakhs. Officer would be how much? Minimum 10,000 penalty and 100 rupees per day. And it can go up to 50,000. For company it can go up to 2 lakhs. But for this guy it can go up to 50,000 rupees. Got it, guys? Very, very simple. Any register that you keep will be a prima facie evidence. Prima facie means on the face of it, it will be 100% an evidence that the company did this or did not do that. Place of maintenance. At register of the company you should maintain. At any other place in India which more than 1/10 of the total members. Same thing as you have already seen this. Approval by a special resolution, and whenever you pass special resolution, MGT 14. Same. Next. Period of maintenance. When should you keep? How long should you keep, etc. With respect to some foreign registers also. Yes. So if you see, this is an interesting thing. For this register of members, index of members and foreign register, it should be permanently preserved unless it is discontinued. Permanently preserved. But when it comes to a register of debenture holders, foreign register of debenture holders, and annual return and certificates, etc., that is 8 years from the date of redemption of debentures or securities. 8 years from the date of redemption, not 8 years from the date of issue. All this can be MCQ question. They can give you a register of debenture holders should be maintained when? 8 years from the issue of debentures, 8 years from the redemption, should from the 8 years from the date of redemption. They can say 8 years from the year when the redemption ends. No, it is from the date. MCQ. Whereas register of members itself preserved permanently. Who should keep this register? CS of the company, company secretary, or any other person who is authorized. Can I inspect the registers 100%? Yes. Without any payment of fee, any member debenture holder can inspect. Sir, I am not a debenture holder. I am not a security holder. I am not a member also. Can I am a random outsider. Can I do it? Yes. So it is 50 rupees per inspection maximum. You can charge and you can inspect the accounts. When can I inspect? Sir, inspect the register. When can I inspect? At least 2 business hours. You know, they will give the notice, etc. The person inspecting can take extracts from the register also without any payment. He can take extracts. Can I ask for copies from the company? Yes. Who can ask? Member, debenture holder, other security holder. Fee also is there, 10 rupees per page maximum. You should provide. How many days? Within how many days you should provide? 7 days. Now comes the important areas. Annual general meeting. When can annual general meeting be held? They keep on asking this. When can annual general meetings be held? Excuse me. When can annual general meetings be held? If it is the first AGM, it should be held within 9 months from the end of the financial year. If it is a subsequent AGM, if it is a first AGM, 9 months from the end of financial year. If it's a subsequent AGM, simple rules. One AGM will be held every calendar year. Second, gap between two AGMs should be maximum of 15 months. I repeat, one AGM will be held every calendar year. Gap between two AGMs, maximum 15 months. With ROC extension, it can go up to 18 months. Third one, 6 months from the end of the financial year. 6 months from the end of the financial year. Mind you, whichever is earlier. Whichever is earlier. This is purely based on reasonable construction. Whichever is earlier. Now, section 96.2, original meeting. Original meeting, when can you hold AGM? And adjourned meeting, when can you hold? These charts are very, very important. Everything is covered here, nothing to worry. Original meeting should be held within business hours between 9 a.m. and 6 p.m. and it should not be held on a national holiday. Registered office or place where the registered office is situated. So you can hold it if the office is in Chennai, you can hold it anywhere in Chennai, or you can hold it in the registered office itself. Can you hold it outside India? Not at all possible, guys. Even if you are a foreign company, not possible at all. Can you hold anywhere in India? So the company, for example, is in Chennai. Can I hold it in Bangalore is the question. See, for registers, etc., you can maintain. The books also you can maintain outside. But can you hold the AGM also outside the registered office space? Forget about Chennai and Bangalore. Chennai is my registered office. Can I hold it in Coimbatore also? Any other place in India where other than the city? The answer is only for one. AGM at any other place in India is allowed only and only for what? If the company is unlisted. And for that also you need a unanimous resolution. Company must be unlisted, and that also it should be unanimous resolution. Everybody should agree. Everybody should agree. That is the original meeting. Next, adjourned meeting. Adjourned is of two types. One is for want of quorum. Other one is other reasons. One is for what? For want of quorum. Second one is other reasons. What is for want of quorum? Which means in the original meeting, quorum is not present. So what happens in the adjourned meeting? Other reasons. In the sense, one is for want of quorum. In the original meeting, quorum, minimum number of people required to transact valid business, they are not there. So meeting is adjourned. Other reasons can be your fights, or the discussion cannot go through beyond a certain period of time because the time is over. They'll say, let's discuss this next time, or next we'll adjourn the meeting and discuss it. That's the adjourned meeting. Coming back, for want of quorum, 1032A. 1032A. They say, wait for 30 minutes. If nobody comes within 30 minutes, automatic adjournment. Same time, same place next week. It can be adjourned to a national holiday also. Mind you, original meeting cannot be held on a national holiday. Adjourned can be held on a national holiday. Board can also determine the time and place. Instead of next time, same place next week, the board can also have a different, place in mind. What if the meeting is adjourned for other reasons? Like, as I told you, fighting, or let's say fighting also sometime happens, no? I've seen parliamentary sessions where people fight. So they'll start throwing chappal, mic and all those things. So in that case, what? Act is silent. Board only will decide when it can be adjourned. It can be adjourned to a national holiday also. National holiday means and includes a day which is declared as national holiday by central government. So basically public holiday is a Sunday. National holiday is obviously whatever is declared by the government. When I say means and includes, it is an exhaustive definition, and also it's inclusive to some extent, just to give an example within that exhaustive definition. Next, coming to financial year definition. Financial year. What do you mean by financial year? Financial year means the period for which the financial statement of the company is made up. It is ending on 31st day of March every year. Basically, any time you take 31st March of the next year will be called as a financial year. Even if you start your period from October 21, 31st March 22 will be the end of the financial year. But what if the company is incorporated in January? I incorporate my company on 1/1/22. Will my financial year be 31/3/22 is the question. For that it says 31st March of the following year. If my company is incorporated on 1/1/22, my financial year will be 31 March 23. 31st March 23. Yeah. Then if there's any different period as financial year, especially if your company, holding company, a subsidiary company of especially a foreign company, there they maintain 14 months period, or they maintain January to December. So here what should I do? If it is required to follow a different financial year there, they say please for that financial year only you file it there. But when you are consolidating here in India, you should follow our financial year. If you are consolidated outside India, then follow their financial year is what they are trying to tell. Can I make it 8 months also as one financial year? 13 months as one financial year? Yes. Me and you cannot do it, central government. The central government may, on an application made by such company, allow any period as its financial year, whether or not that period is a year. Year means 12 months, January to December generally. This is fine. Coming to 97. Power of the tribunal to call AGM. 96 we did, now 97. Power of the tribunal to call an AGM. If any default is made in holding the AGM of the company under section 96, the tribunal may, on an application of any member, call or direct the calling of an AGM of the company. Such directions may include a direction in that one member of the company present in person or by proxy shall deem to constitute the meeting. Generally, proxies are not allowed to be counted in the meeting, but this is an exception. In this case, even proxies can be allowed to be counted in the meeting. So this is default in holding the AGM. You go to the tribunal and tribunal will say, boss, you should hold the AGM for sure. That's what it is. Then of course, power of tribunal to call meetings of members is the extraordinary general meeting. As I told you, there are only two types of general meetings, AGM and EGM. So AGM, if you do not hold, it is given under 97. EGM, if you do not hold, it is given under 98. If for any reason, if it is impracticable to call a meeting of the company or for any other reason, then the tribunal may either suo motu, means voluntarily, or an application made by any director or member of the company who would be entitled to vote at the meeting, means equity shareholder, order the meeting to be called immediately. Same thing. And they may say that even one member present in person or proxy shall be deemed to constitute a meeting. That is that particular section. Punishment you leave. Section 100, EGM. EGM can happen through various things. EGM can happen via EGM by board, that is suo motu, EGM by board. EGM by board on requisition of shareholders, certain shareholders. Third one, if the requisitionist call the meeting, correct, and the board holds the meeting, it will come there. Sometimes the board does not hold the meeting even though you call for the meeting. You call for the meeting, despite calling, I am not holding. What to do? Then the requisitionists themselves will hold and call. Both they will do. Called and held by requisitionist on the failure of the board of directors. Suo moto, it's fine, they'll only call. But what will happen if they are EGM by board on requisition by the members? The board should call. So this is the thing. The moment I receive a requisition, who will request for it? 1/10 of the voting power, 10%. If they say, I want a meeting, within 21 days of receipt of that requisition, you should give a notice of the general meeting. Who should give? Company. And that notice also should go for 21 days, as you know. As you know, notice of every meeting should go for 21 days. That's also 21 days. And the general meeting has to be called. Mind you, the gap between receipt of requisition and the general meeting should be maximum 45 days. Got it? On the other hand, you will request 21 days over. Ideally, I should have sent a notice as a company. I do not send. The moment I come to know that the board is not taking any interest, the people who requested for the meeting can take matters into their own hands, and the requisitionist now can call for a meeting. The requisitionist can call for a meeting. Within how many months they can call? Within 3 months from the deposit of requisition. So gap between deposit of requisition and general meeting should be maximum 3 months. When will it get triggered? After 21 days. The company has received the requisition. The requisitionist will wait for 21 days. No action by the board. Then they can take matter into their own hands within 3 months. 3 months from date of requisition. In that 21 days already gone. So remaining some 2 months, 10 days. Within that they can call a meeting on their own. So EGM by board suo moto, that is a simple form. They can only call a board, shareholders meeting whenever they want to. And the director should be present at the meeting, and they should give at least 21 days before the meeting. Shorter notice also can be given, less than 21 days, if consent is obtained from over 50% of the members holding 95% or more of the voting rights. For example, if 960 people have 4% of the voting rights and 40 people have 96% of the voting rights. What they are trying to tell is a shorter notice is possible if overall there are 1000. They are trying to tell is at least 501 people should give a notice for shorter notice, less than 21 days, and these 501 people should have minimum 95%, which means these 40 people definitely have to give. Apart from that, remaining 461 people should come from this, is what they are trying to tell. Very simple. I told you requisitionist will be what? 1/10 of the paid up share capital or 1/10 of the voting power. Time and place. Again, important chart. When will I have the meeting? What is the time and place? Where is the time and place? Board, what is the time and place of the meeting, etc. For board, original meeting can be held when? Any place in India, it can be held on a national holiday also. Any place in India, it can be held on national holiday as per the Act, yes. But there's a SS, Secretarial Standard, SS2 says, kindly avoid national holiday since employees will be there. Employees also have to come and work, right, in the, if you hold a meeting. So they are saying kindly avoid a national holiday. But that is only Secretarial Standard which is saying. It should be done within working hours, can be done outside India also. An EGM can be held outside India, but it is only for one case. Foreign company which has a wholly owned Indian subsidiary. A foreign company which has a wholly owned Indian subsidiary, only those companies can do it. AGM cannot be held, guys, only EGM. AGM cannot be held, only EGM. Mind you, AGM cannot be held. Next. If it is held by the, called by the requisitionist and called and held by the requisition on failure of the board, then what? Original meeting Similar to AGM provisions, cannot be held on national holiday because of that SS2. Then what? Business hours. It should be held during business hours only, 9 a.m. to 6 p.m. It should be held in the registered office or any other place where registered office is situated. But if the meeting is adjourned, which one? The meeting called by requisitionist only is adjourned. Very interesting thing. If quorum is not met within half an hour, then meeting shall stand cancelled. There is no concept of adjournment. The ones who called, they only did not come. The ones who called, they only did not come. So meeting shall stand cancelled. There is no concept called adjournment. So meeting will be called 21 days before the meeting, and since it is 21 clear days, 2 days of postal transit must be excluded. Date of sending the notice should be excluded. Date of the meeting must be excluded. So it is what? 21 plus 2 plus 2. And the notice will be served. Served to who all? Every member of the company, legal representative of any deceased member, if anybody dies, to the legal representative, assignee of an insolvent member. So if a person becomes insolvent, the court will appoint a person like a receiver to handle the entire thing, liquidator. So that person is called as the assignee. That person also has to be given the notice. These are all MCQ questions, or they can also be like regular questions that they ask you. And the auditor or auditors of the company also I should give, and every director of the company I should give. By mistake, if I do not give a notice, by mistake, so can it be pardoned? Yes. Will it be pardoned? Answer is yes or no. What do you think? So if you see any accidental omission to give notice, etc., shall not invalidate the proceedings of the meeting. Means by mistake, you have to prove. You have to prove that you could not send the notice by mistake. If a company can prove it, meeting will remain valid. Meeting will remain valid. That is what they are trying to tell. Can I give it at a shorter notice as discussed? For EGM, it should be majority in number and 95% in value. But for AGM, my dear friends, it is 95% of members. If there are 1000 people, 950 members should give a notice saying AGM can be held less than 21 days notice. That is what it is. Then procedure for giving the notice, etc. We do not have the time to do all that. You can go through. Nothing great here. You can send it via email and all this letter, etc. Yes. Coming to the type of businesses. You have two types of businesses: ordinary business and special business. Ordinary business means Dada points that happens at AGM. I love Saurav Ganguly, so I will use his example. Dada. What is Dada? Appointment of director. D for director. A, accounts, consideration of accounts. D, declaration of dividend. Again A, appointment of auditor. If the Dada points happen at AGM, that is called as ordinary business. Business means the item of discussion in the meeting. What is a special business then? If the same Dada point happens at EGM, that will be special. Apart from Dada, anything other than Dada that happens at EGM, that is also special. Basically, guys, any business at EGM is special business. Any business at an EGM will be special business. Third, other than Dada points at AGM also, apart from these four, let's say amalgamation they want to do, they want to buy back shares. In all these cases, if it happens at the AGM, that also will be special business. For every item of special business, you have to send something called as explanatory statement. For every item of special business, I have to send something called as explanatory statement, that is given here. So this is important. What are the contents of the explanatory statement? Material facts must be given, whether who is interested, etc. Nature of concern or interest means if a director has some financial interest in that particular company or in that particular item of business, then you have to disclose. And by whom? Of every director, every key managerial personnel, even relatives of every director, etc. Relative is defined into clause 77. Relative definition is person and that person's spouse, brother, sister, father, mother, son and son's wife, daughter and daughter's husband. That's it. None of the spouses side are covered. That is the meaning of relative. Any other information also should be given there. Very, very simple. That is regarding ordinary business and special business. Now coming to an interesting area of quorum. Quorum. Quorum means what? Quorum can be for private company and a public company. Quorum. Original meeting, adjourned meeting. Original meeting, adjourned meeting. So for quorum for private company, 103 is subject to the articles of the company. If articles are silent, then quorum will be as per the section. If articles are silent, then quorum will be as per the section. As per the section, it is what? 2 members personally present. Guys, the keywords are personally present. That is why these people are not allowed. Who? The, what do you say? The people who are proxies are not covered. 2 members personally present is what they say. On the other hand, for a public company, it can be original also, it can be adjourned. Let's see. In original meeting, articles can fix a larger quorum. Articles can have a larger quorum, but articles are silent. What is the quorum? The number of members are less than or equal to 1000, quorum must be 5. Greater than 1000, less than or equal to 5000, quorum is 15. Greater than 5000, quorum must be 30. Keywords are what? MPP, members personally present. That is the keyword. Members personally present. On the other hand, guys, adjourned meeting. Adjourned meeting. See, in the original meeting also there was no quorum. Adjourned meeting also there is no quorum. That's why concessional quorum. Concessional quorum means they say at least 2 people come, that's enough. Mind you, original meeting also quorum was not there. Adjourned meeting also quorum was not there. Then concessional quorum will come. But if the original meeting quorum was there, but it still got adjourned because of other reasons. I told you, fighting, etc. That is other reasons. Here, no concessional quorum will come. Normal quorum provisions will apply under 1031. And in this case, generally proxies are not counted. Generally, in any of these things, proxies are not counted. Except I told you where proxies are counted was where the AGM or EGM cannot be held, and I'll go to the tribunal. There they will say when proxies will be counted. Coming to proxy. Who can appoint a proxy? Any member of the company who is entitled to vote at the meeting can appoint a proxy. Proxy provisions are very simple. A person can be appointed as a proxy of not more than 50 members. So one proxy can actually represent 50 members. However, if one of the members is holding or the group of members are holding 10% of the total share capital of the company, then it will stop there. For example, one person A can hold 50 proxies and that 50 combined shareholding is 8%, so no problem. But A is holding just 3 people proxies. His 3 people put together is more than 51%. So he should stop only at 3 is what they are trying to tell. He cannot say I can now have 47 more. Not possible. If one member holds more than 10% of the share capital, now A is holding a proxy of only 1%, 53% he holds share capital, then that proxy cannot be appointed for any other member, obviously, because that thing has been breached already. That's what they are trying to tell. Other thing is okay. Next, apart from that, you have to appoint a chairman also. Chairman provisions also, you have to appoint a chairman. You have to appoint a chairman. Selection of chairman, election of chairman, chairman of general meeting is what they say. Election by show of hands method. How will you elect a chairman? Members personally present at the meeting shall elect one of themselves to be the chairman. show of hands method like this. But you can also demand a poll. You can also demand a poll. If a poll is demanded on election of the chairman, it shall be taken forthwith in accordance with the provisions of the Act. So let us say, first they said, who want to be a chairman? Show of hands that I am the chairman. When I was about to take the chairmanship, some other person, let's say who has 15% share in the company, he stands up and says, no, I don't want you. Please, let's take all. When you did show of hands method, it was one person, one vote. I don't want one person, one vote. I want one share, one vote. So I have 15% share capital. I don't want you as the chairman. So me, though I am a chairman now, should immediately take one more meeting for my replacement only. That's what they say. The chairman who is elected by show of hands should forthwith call immediate meeting for what? Appointment of chairman. Again, so it can be me also, it can be anybody else also, but I should call for the meeting immediately. Shall continue to be the chairman until some other person is appointed as chairman is what they say. Then when we are doing proxy, one extra thing it's there. Yes, proxy form. In that, who should come as a proxy? You should write the form. That form should be deposited at least 48 hours before the meeting. Correct? 48 hours before the meeting. Articles cannot tell 60 hours before you should do. Articles cannot say 72 hours before you should do. If article says 60 or 72 hours, whatever the case may be, it shall be void. Law gives 48 hours. Anything longer than 48 hours will be deemed to be 48 hours only. That's about it. Then a couple of points we'll do and we'll take a 5-minute breather, guys. Seeing which is important, which can be done, which cannot be done, which can be skipped. Restriction on voting rights 106. Articles of Association of the company provides that no member shall exercise voting rights on shares. Yes, so voting rights on share generally is free for all, but restriction is possible only for these three things. If you have not paid call money, then I can restrict your voting rights. Any other sum presently payable, if you have taken a loan based on the shares, then also if you have not repaid the loan, then also I can say I will take away your voting rights. Third one, company has exercised lien. So company has taken over the shares, they have exercised lien. In these three cases, you can restrict the voting rights. In any other case, restriction of any voting rights would be void. It would be void. Then electronic means, voting by show of hands, all that, you can go through. We do not have the time to do all these things. Basically, there is electronic voting system, which is email, remote voting system. Remote voting system is meeting is happening face to face, but there are various kiosks everywhere. You can go and vote. There are kiosks before the meeting also, they would have kept in other places. You can go and vote. That is called remote e-voting. That is all very, very simple. Then there is public notice, remote e-voting, all that you can go through. Yeah. And certain cases you will appoint in this entire to look after how the meeting is done, etc. You will appoint a person called scrutinizer. A scrutinizer will be a company secretary and he will ensure that the entire voting mechanism is done fairly and there is no technical problem, and also there is no, manipulation or rigging of the votes. That will be done by that. And finally, he will declare the winner or whatever it is of the entire scheme of things. Done. So the remaining part we shall do after a quick 5-minute breather. Yesterday I gave 10 minutes, now 5 minutes is enough. 5 minutes, guys, that's it, okay? We'll take a break for 5 minutes and come back after 5 minutes. All right, guys, come on, let's begin. Demand for poll. Who can make demand for poll? As I told you, 1/10 of the voting power, or anybody who's holding shares minimum 5 lakh rupees. Holding shares minimum 5 lakh or anybody having 1/10 of the voting power can go for what? Calling the, demanding a poll. Then poll should be taken immediately. Now there is something called as postal ballot. See, what's the difference between postal ballot and e-voting? E-voting is where the meeting will actually happen at that place wherever they've called for, and the voting only can happen via electronic means, or remote e-voting also. Voting will happen separately, but the meeting will definitely happen whenever the meeting is called. But in postal ballot, it's in the absence of the meeting, or rather meeting will not happen, but the documents etc. will be sent to the respective shareholders. They will go through that and they will vote. The entire procedure of me sending the documents etc., them voting etc., it's not just a voting, it is also called as a meeting. The entire thing is only called as a meeting. That is called postal ballot. So postal ballot is a means of ascertaining the views of the members through post, since many members may not be in a position to attending the general meeting, and hence the preferences are important. It is done through electronic means. Within 30 days of dispatch of the notice, they will do it. Postal ballot, this they'll generally ask, it is mandatory for which all cases? It is mandatory for alteration in objects clause, alteration for in the AOA, for changing the provisions of the definition of provisions of private company, private to public, public to private, change in the registered office, buyback of shares, selection of director. In all these cases, postal ballot is mandatory. And it's optional for what all cases? Any item of business other than ordinary business. So for all special businesses, it is optional. These are also special businesses only, but for this it is mandatory, is what they said. Very, very simple. Notice must be given and other shorts, you can go through. Then the members' resolution will be circulated to everybody, and that's what it is. Then when it comes to proxy, as I told you, proxy we have seen. If you cannot attend the meeting, you can appoint somebody else. He is called as a proxy. However, if one company X Limited holds shares in one more company Y Limited, this company cannot in person go and attend because it's an artificial person. So what will happen? So they say if a body corporate is a member, and then they can send a representative. So these people will send a person, Mr. A, to attend. He will not be called as a proxy. He will not be called as a proxy. So a representative, my dear friends, will not be called as a proxy. Similarly, if you are the office of the, if you are a president or a governor of a state or a president of the country, if you also send your representative, then that person also will be counted. He will not be counted as a proxy, is what these two sections say, 112 and 113. They are not called as proxy. Resolutions we have seen already, ordinary and special. Ordinary is under 1141. Notice must be given. The votes cast in favor must be more than the votes cast against, and only for those who are entitled and voting. If the act is silent, always assume it is an ordinary resolution. For a special resolution, all these points must be satisfied. Notice must be given. Notice must mention that the intended resolution is special, and majority, that is minimum 75% majority should be there, and those who are entitled and voting, again, that's what it is. How do you, filing of special resolution will be filed in MGT 14 within 30 days. What is the manner of casting the votes? So votes may be cast by show of hands method, poll, electronic, postal ballot, any of these cases, and votes may be cast either by a member present in person or through proxies, where proxies are allowed. So this, what do you say? Voting will be done by proxies also. Proxies cannot do it in show of hands. Proxies can only do it via poll, as we already know. And if there is any equality of votes in ordinary resolution 50-50, then the chairman will get the deciding vote. That is called as the casting vote. So the chairman will get a casting vote. Then, guys, this is again important, special notice. This we will see in auditor's provisions also quickly. What do you mean by special notice? 115 read with Rule 23 of Chapter 7 rules. Any person that is having 1% of the voting power or minimum 5 lakh rupees paid up capital, such members, in normal notices, company will give the notice, but in a special notice, members are giving notice. Such member will give it to the company not earlier than 3 months, not less than 14 days before the meeting, and the company will give to all members not less than 7 days before the meeting. This notice called as special notice. Special notice can be sent only and only in 4 cases. This is removal of director before expiry of the term. This is appointment of a new director in place of director who is removed at the same meeting. One is what? Removal of director before the expiry of his term. Next, appointment of new director in place of the director who is removed at the same meeting. These two are CFNL syllabus. These two are inter-syllabus. Appointment of auditor other than retiring auditor. Expressly providing that retiring auditor shall not be reappointed. So, when the auditor is retiring at the 6th AGM, 5 years he will work, right? From the first AGM he will be appointed in the 6th AGM, then go on 6, 11, 15, 16 like that. So, one is, if I want to appoint somebody else in his place, then this will come. Second, if I don't know who to appoint, but I know for sure that I don't want this guy to continue, expressly providing that the retiring auditor shall not be reappointed. In that case, I'll have to give a special notice. Then the resolutions all will be filed in MGT 14 that we have already seen. Minutes of the meeting will be given. Minutes will be given on each and everything. Who will sign the minutes? Signature of the minutes will be initialed by chairman, and towards the end he will sign. And can I write all nonsense things in the minutes also, like whatever personal discussions happened? No. It is a discretion of the chairman. No matter shall be included in the minutes if the chairman is of the opinion that it is defamatory of any person, it is degrading any person, or it is irrelevant to, or immaterial to the subject matter. If you feel it's immaterial, you can leave that. Detrimental to the interest of the company means what? It is going against the interest of the company. Then you need not go ahead with the minutes of the meeting, is what they say. Who will sign the minutes? Each page of every minute book shall be signed, initialed, and the last page shall be dated and signed as follows. Who will do it? Notice of minutes book, board meeting and committee meetings, everything will be signed by chairman of the same meeting. And whether minutes of general meeting will be signed by whom? Chairman of the same meeting within 30 days from the conclusion of such meeting. And resolution passed by postal ballot, who will sign? Chairman of the board. In case of death, signed by the director who is duly authorized. This is what it is. Next, they can ask you, see, register we saw, no, some is preserved permanently, some is 8 years, etc. What about minutes book? Minutes book also will be preserved permanently. Minutes book will be kept at registered office. Definitely you can inspect during business hours. Any member can do so. Copies also will be granted within 7 days. Free soft copy or hard copy, 10 rupees per page. All these are MCQ questions that they can ask. And a report of the AGM also should be sent. We do not have time to do all this, leave that. And as far as OPC, OPC again, meeting will not be there for an OPC. For general meeting will not be there. So if he just signs what the documents and send it, that itself will be deemed to be the meeting. Very, very simple. One second. Just want to show you quickly something, if I have it. Alright guys, as far as dividend is concerned, declaration of dividend, this is chapter number 8, 123. No dividend shall be declared or paid by a company for any financial year except, so what are the sources of dividend? Either from the current year profit or, previous year profit. But in either case, I have to provide for depreciation as per schedule 2. Or out of the money provided by CGST for payment of dividend in pursuance of any guarantee. So this is, government can give certain guarantees, and based on that they can pay. This you leave, but basically where I can pay dividend, the current year profit or previous year profit after providing for depreciation. Can I, if there is no money in the current year profit, can I pay out of the reserves of the previous year? Possible, but there are these rules which are important. Rate of dividend. So basically guys, I am taking the previous year's reserves and paying the current year shareholders. So obviously you have to follow certain rules. If previously you have given some 7-8% dividend, this time you cannot give 12%. Imagine. Why? Because you are taking the money of the previous year. This year you don't have any money. Previous year's money you are taking. You are taking previous year's money. Tell me, how is it possible that you can give more dividend rate? Not possible. So you see, rate of dividend declared shall not exceed the average rate of dividend in the immediately 3 preceding financial years. Whatever you have given in the past 3 financial years, average it out, maximum that rate can be given. Second, once you draw that money from that previous year's reserves, amount drawn from accumulated profit should be less than or equal to 10% of PUC and FR. Basically, the amount that you withdraw must be less than or equal to 10% of net worth. The amount that you withdraw must be less than or equal to 10% of the net worth. Third, first you should utilize it for set off of all the losses in the financial year, current year, and then you can do the same thing. Then, once you withdraw that 10% of the net worth, whatever remains in the end, the reserve after withdrawal will be what? Shall not fall below 15% of the paid up share capital. So whatever remains finally should be minimum 15% of paid up share capital. Minimum 15% of paid up share capital. So interim dividend also is part of dividend itself. Dividend includes interim dividend. So who will declare the interim dividend? So guys, as far as what do you say, interim dividend is concerned, it is recommended and declared both by the directors. Whereas if it's a final dividend, it is recommended by the board of directors but declared by the shareholders at AGM. This we should know, and I hope you already know this. Correct? Yes. Interim dividend. So the board may declare interim dividend during any financial year or any period from the closure of financial year till the AGM. So I'll just explain this in a better way. Come here. So if it is 1st April 21 to 31st March 22, let's say all these spots here, they are the interim dividend for the year 21-22, obviously. Now from 1st April 22 to 31st March 23, many other dividends were paid here also. Correct? Many dividends were paid. The AGM for the year 21-22, the AGM for the year 21-22 was held on 30th September 22. And one blue color thing which is given here, that is the final dividend that they paid for 21-22. Final dividend that they paid for 21-22. That is what we need to understand. So that is the final dividend that they paid for 21-22. So 1st April 21 to 31st March 22 is one. All these spots. This is the interim dividend for 21-22. Then on 30th September 22, this is the final dividend. Final dividend for what? 21-22. On the other hand, between 1st April 22 to 31st March 23, other dividends are also paid. Now this dividend here, this dividend, interim dividend, would that be the dividend for 21-22 or would that be the interim dividend between 22 and 23 is the question. So now it is clarified that interim dividend for every year can be paid during the financial year also, that is from 1st April 21 to 31st March 22. Up till what date? Up till the date of the AGM. So these orange spots could be the interim dividend for 21-22 or it could also be the interim dividend for 22-23. That has to be specified clearly when they are declaring. So basically guys, the orange spots can be the interim dividend for 22-23 or interim dividend for 21, 22. This was the change. Apart from that, after the AGM, these blue spots obviously will be just interim dividend for the next year, 22, 23. This is the provision. These are the provisions. Very, very simple. So you can again rewind and watch it again. You will get clarity. Then overall dividend provisions. The board will recommend the final dividend. At the AGM, dividend will be declared. Final dividend will be declared within 5 days from the AGM. Within 5 days from the AGM, you should transfer it to a separate bank account. Within 5 days from the AGM, you should transfer it to a separate bank account. And within 30 days from the date of declaration, within 30 days from the date of declaration, the dividend has to be paid. Mind you, 5 days transfer to separate bank account. And within 30 days from declaration, you should pay. After 5 days, again 25 days, you will get no overall 30 days. If you don't pay within 30 days, from the 31st day onwards, 18% per annum, this thing will come, interest. Deadly, 18% per annum. Anyway, let us say you paid but it got bounced back, or you paid but then that person is not traceable. Then within 7 days from the expiry of 30 days, within 7 days from the expiry of 30 days, you should transfer to an account called unpaid dividend account. Unpaid dividend account. Within 90 days of that date, you should give all the details of who are the people who are unpaid, etc. All that you have to maintain. And this will, if you don't do that within 90 days, again 12% interest will come. This 18% is different from this 12%. This unpaid dividend account will remain for 7 years. And after 7 years, you should transfer to another account called Investor Education Protection Fund. Investor Education Protection Fund. After 7 years. This is the entire structure of dividend. Hope you got it, guys. Same thing is given here only. Fine. But if there is a loss, can I still pay interim dividend in this quarter? If there is a loss, yes. The company has incurred loss during the current financial year up to the end of the quarter immediately preceding the date of declaration of dividend. Same rules you have to follow. So basically, I am paying it, let us say in October 22. This, or let's say I am paying it in August 22. August 22 is in which quarter? It comes under April, May, June, July, August, September quarter. And it says incurred loss during the current financial year up to the end of the quarter immediately preceding the date. End of the quarter immediately preceding the date. This date is 22nd, let's August 22. Anytime in August 22. What is the immediately previous quarter? April, May, June. Till April, May, June, if there was a loss, then such interim dividend shall not be declared at a rate higher than the average dividend rate in the immediately 3 preceding financial years. Which means what? Same rate of dividend will be maintained. Same rate of dividend will be maintained. I can actually pay, even though there is a loss, I can pay dividend. But the same rate of dividend for the past 3 previous financial years will be maintained. I cannot pay a larger or a higher rate. It's not possible, is what they are trying to tell. Apart from that, we have seen all the dividend provisions. That whatever I told you, that is more than sufficient. For other things, we honestly do not have the time. This much is enough for a revision. The overall brief overview. Now, let's come to chapter number 9. Accounts of companies. So it starts from section 128 and it ends at section 138. So books of accounts to be kept by the company. Every company shall prepare books of accounts at the registered office. It should be kept at the registered office. Can I keep it any other place in India? Yes. For that I have to file AOC 5 within 7 days. Within 7 days I should say that I want to shift. After shifting within 7 days I should say that I am shifting it. No problem. Period for keeping the books of accounts, 8 financial years. For 8 financial years, I should keep the books of accounts. It can be kept for a Longer period also if CG has ordered investigation. In a practical case, ILFS, Infrastructure Leasing Financial Services, they have told that you should maintain for around 10-11 years. So yes, you can maintain for more than 8 years also if the CG has ordered an investigation. Books of accounts, true and fair view, accrual basis and double entry system must be there. True and fair view, accrual basis and double entry system. All the three things must be there. That's the meaning of the entire concept of proper books of accounts. Inspection will be done during business hours, and any default, imprisonment 1 year or fine 50,000 to 5 lakh or both. 129 financial statement. Financial statement shall be laid down in the AGM. They shall give a true and fair view and comply with the accounting standards under section 133. So a company which has a subsidiary company shall also have a consolidated financial statements of the joint venture, associate company and subsidiary company also. This will be in form number ANC1. So your entire CA final financial reporting syllabus, which speaks about consolidation of financial statements, etc., will all come under this. Non-compliance with accounting standards. The company shall disclose. Now, if you have not followed the accounting standards properly, accounting standards are mandatory as per 129.1. It can be accounting standard AS or your Ind AS. It is mandatory. If you do not follow the same, the company shall disclose what? Deviation of accounting standards, reasons for such deviation, and the financial effect of such deviation. All the three shall be disclosed. Again, contravention, it is similar to that is what they say. And apart from that, from 1st April 22, accounting software, you should record the entire audit trail, because people used to just record it. I mean, you should just make entries and then delete entries and then later do a lot of money laundering, etc. That's why they say a record of every transaction is needed now as per section 129. 130. Can I reopen the accounts of the company? Yes. A company shall not open its books of accounts and recast its financial statement unless what? Who should apply? Application should come from central government, income tax authority, SEBI, or any other statutory body or any other person concerned, where relevant earlier accounts were prepared in a fraudulent manner. The relevant earlier accounts are prepared in a fraudulent manner. If the earlier accounts were committed, fraud was committed, or the affairs of the company were mismanaged during the relevant period, casting a doubt on the reliability of the financial statements, either fraud or mismanagement if it had happened, then the central government, income tax authority, or the SEBI can apply to the National Company Law Tribunal. Tribunal will obviously go through the principles of natural justice. It will give an opportunity of being heard to everybody, and then they will order for what? Revision of accounts. And when can I, for how many years before I can open the accounts? 8 years. But remember, I told you the books of accounts can be maintained for a longer period. If a longer period was suggested, then I can go ahead and open the books of accounts for a longer period also. That is regarding 130. (131) Revision of financial statement or board report. So this is voluntary revision. 130 is reopening. 131 is voluntary revision. If it appears to the director of the company that the financial statement or the report of the board do not comply with the provisions of section 129 or 134, doesn't comply with what? 129 or 134, that is your financial statement or board report, then what happens? I can revise the financial statements. I can apply to the NCLT and they will pass an order where I can revise my financial statements. Very, very simple. Then you have section 132, that is National Financial Reporting Authority. You can go through that. I do not have the time to sit and do that. But of course, there will be a chairman and 3 full-time members and 9 part-time members in the National Financial Reporting Authority. All that you can go through, nothing great in that. I mean, nothing, I cannot spend time on that now in the revision session. It is something that you can go through on your own. Then of course, section 133 talks about what? Accounting standards. Accounting standards, the power to prescribe accounting standard rests with the central government. And at the first stage, ICAI recommends the standards of accounting. The second stage, standards of accounting shall be examined by the NFRA, National Financial Reporting Authority. Examination will be done. National Financial Reporting Authority. Then, at the third stage, the central government examines a recommendation made by NFRA. Then central government may prescribe the accounting standards after consultation with the National Financial Reporting Authority. National Financial Reporting Authority. Section 134. The financial statement, including the consolidated financial statement, will be first approved by the board. So basically, guys, what is the entire procedure? First approval will happen. Then authentication will happen. After that, it is sent to the auditor for the report. After auditor's report, it will be circulated to all the shareholders. And the books of accounts are laid before the AGM. And then at the AGM, they will adopt. Adoption is possible. Adoption is not possible also. If adoption is not done, then unadopted accounts will be filed, which are provisional in nature. If you adopt it, then you will file them as well. This filing will happen under section 137. The approval and authentication will happen under 134. Circulation will happen under section 136. Auditor's report will happen under 143. It's all linked, right? And filing will be happening under 137. So this part, whatever I am discussing now, is about approval. Very, very important. Who will approve is one question. Who will sign is one question. So approved means what? There will be a board meeting where majority will approve. Then who will authenticate? Chairman plus managing director plus CEO plus CS, or chairman and two directors, CEO, CS. It is this or this. Generally, chairman MD will be the same, guys. So chairman MD plus director plus CEO plus CS mandatory. Or if let's say MD is not there and one of the directors only is the chairman, then two directors, CEO, CS. CEO, CS will be remaining the same. Then submitted to the auditor for his report. It will have all these contents. That's okay. Then in that, there is also one thing called as the DRS, Director's Responsibility Statement. 134.2 talks about the board report. And from that board report will come 134.3, etc. Yes, in that 134.5 speaks about the Director's Responsibility Statement. So 4 things are there. This will come in audit also generally. Accounting standards had been followed, I should tell, as a director. Accounting policies have been applied consistently, I should tell, as a director. And I am also saying that director will take responsibility for the proper care and maintenance of accounting records. Maintenance of books of accounts is the duty of the director, not the auditor. Maintenance of the books of accounts is the duty of the director, not the auditor. Then director had prepared the annual accounts on a going concern basis and the internal controls are adequate. All these things I will tell. Otherwise, there will be penal provisions. Then I'll come to CSR. Then what happens? It will be circulated. All these documents, I'm doing this here, it will be circulated. All these audit report, board report, financial statement, notes to accounts, everything will be circulated to whom? Every member, every trustee, every debenture holder, to all persons entitled, not less than 21 days before the meeting. It will be given. 21 days. It's called AOC 3. AOC 3. This also they can ask you for 2 marks. Should you send documents in electronic mode also? Yes. In case of all listed company and such public company with net worth more than 1 crore, and turnover more than 10 crore, financial statements may be sent via electronic mode. This circulation under 136 should be done 21 days before the meeting. But shorter notice also I can do, less than 21 days. It should be approved by what? Similar to EGM. Majority in number, 95% of value. Majority in number, 95% of value. That is called circulation. Coming to CSR, corporate social responsibility. Section 135 applies to a company, includes a foreign company also with net worth of 500 crore or more, or important, turnover 1000 crore or more, or net profit of 5 crore or more, when in the immediately preceding financial year. They should automatically constitute a CSR committee, and the CSR policy should be framed and amount should be spent. How much amount will I spend in every financial year? At least 2% of the average net profit of the company during the immediately preceding 3 financial years. Sir, what if I'm a new company, I just came 2 years ago? Then if 3 years is not completed, then less than 3 financial years. How much should I spend? At least 2% of the average net profit of the company. And generally I will give preference to the local area, is what they say. Extra points here, important. If I could not spend 2%, if I could not spend 2%, because there's an ongoing project, let's say 2% is coming up to 100 crore. In that I have spent 80 crore. Remaining 20 crore is an ongoing project. I am building a school. Payment is not yet due. Unspent CSR relating to an ongoing project, then my dear friends, this 20 crore will be transferred to a special account called Corporate Social Responsibility Account. When should I do it? Within 30 days from the end of the financial year. Within 30 days from the end of the financial year. The above will be spent within 3 financial years. This 20 crore will be spent within 3 financial years from the date of transfer to that account. Because school construction may take 1 or 2 years. I've set it aside for a project. Then this is what you should follow. If it is not spent within that 3 years, it is transferred to one more fund called as the Schedule 7 fund within 30 days from the completion of the 3rd financial year. Separate fund is there, Schedule 7 fund. If unspent amount does not relate to any other project, basically this 20 crore is not set aside at all. 20 crore I have to spend, I have not spent only. I have not set aside also for a school project. What to do? What to do? If unspent amount does not relate to any ongoing project, then transfer to a Schedule 7 fund within 6 months from the end of the financial year. This is different. MCQ questions I can ask. So if it is for a ongoing project, transfer to special account, and there you keep it within 30 days from the end of financial year, you should transfer, and 3 years you wait. If it is not done, then within 30 days of the same, transfer to Schedule 7 fund. But that 20 crore you don't know where to appropriate it, then what to do? Transfer to a Schedule 7 fund within 6 months. Here it is 6 months, should not get confused. What if I do excess payment? I was supposed to spend 100 crore, I will spend 150 crore. Can I take that 50 crore excess? Yes. That extra 50 crore can be set off in the immediately succeeding 3 financial years. These are all the important CSR points. Coming to, I'll just quickly check the inter RTP. Changes, most of it I've already covered as such, nothing great. So in the declaration and payment of dividend, in the IEPF, in Investor Education Protection Fund, I can take over the shares also. Not just the dividend. Dividend unpaid will be transferred. No, even the shares will be transferred. And all the resultant benefits, everything will go to them. Yeah. So this one, 5th May 21, General Circular. Spending CSR for COVID-19 is an eligible CSR activity. It is an eligible CSR activity. It is further clarified that spending of CSR funds for creating health infrastructure for COVID care, establishment of medical oxygen generation and storage plants, etc., manufacturing and supply of oxygen concentrator, ventilator, etc., are completely eligible CSR activity. Then contribution to specified research and development projects to public funded universities, research in science, technology, engineering and medicine are all eligible CSR activities. Also, spending of CSR funds for vaccination of persons other than employees and families. Many companies took it upon themselves to vaccinate the employees and their families. That is not CSR. Other than, important, other than. So if they ask you in the exam, the company spent 20 crore towards vaccinating their employees. CSR? No, other than. Then only it is an eligible CSR activity. Apart from that, one more change, guys. Every company covered under provisions of 135(1) shall now, important, remember this, they will file a report of CSR in form number CSR2. This you have to remember. New form they have prescribed, CSR2. For the preceding financial year, from 2021 onwards, they have to file separate file called CSR2. Along with the AOC4, they should add that. Very important. Okay, these are all the changes that have come in CSR. This much you remember, it's more than enough. Yes, my dear friends, the last chapter, chapter number 10. If the video is little blurry, then I don't know why. Here it's coming very clearly. So you can wait for the video to be uploaded and then you can watch it. Or you can also check my YouTube channel. It will be uploaded there as well. Or either way, you check SIRC or you can come to my channel. It's Punarvas Jayakumar classes. You can see there also, no problem. It will be there both places, guys. You can watch it. Okay. Chapter number 10. Audit and auditors. Section 139 to 148. Very, very important. This can come both in where? Law as well as auditing. Section 139, appointment of auditor. There are three types of auditors: first auditor, subsequent auditor, and casual vacancy auditor. In the first auditor, it is a government controlled company, other company. Government controlled company, non-government, other company. Then government controlled, non-government. First auditor of a government controlled company who will appoint C&AG to appoint within 60 days. Upon their failure, board to appoint within the next 30 days. So it is first 60, then next 30. On failure of the board of directors also, shareholders to appoint within 60 days. So it is 60, next 30 and 60. 60, next 30 and 60. So C&AG to appoint within 60 days. Board to appoint within next 30 days. On failure of the board, shareholders to appoint within 60 days at the EGM. For other companies, for government controlled companies. For non-government controlled companies, board of directors to appoint within 30 days of registration. Board of directors to appoint within 30 days of registration. On failure of the board of directors, shareholders will appoint within 90 days at an EGM. Shareholders will appoint within 90 days at an extraordinary general meeting. So here it is what? 30 and 90. So here it is 60, next 30 and 60, and there it is 30 and 90. Subsequent auditor for a government controlled company, C&AG to appoint within 180 days from the commencement of the financial year. Non-government controlled company, ordinary resolution will be passed in a general meeting. Very simple. Procedure will come to that. On the other hand, in a government controlled company, basically this is for casual vacancy auditor. What will happen? Vacancy will be filled by C&AG within 30 days. If they do not fill it, then board to fill within the next 30 days. Board to fill within the next 30 days. Non-government company, because of death, disqualification or insanity, board will pass a resolution within 30 days. Casual vacancy is the vacancy created in the office of the auditor who was originally validly appointed and who had accepted the appointment validly. That is called as what? Casual vacancy. So if the previous auditor dies or is disqualified or has become insane, then the board will pass a resolution within 30 days. But if the previous auditor has resigned, then board resolution should be passed within 30 days, but also one extra thing. Shareholders approval within 3 months. Shareholders approval within 3 months will come. Shareholders approval will come within 3 months. Why should shareholders approval be taken, guys? Because what if the auditor was pressurized to leave? So the shareholders have a right to know. So shareholders will approval you have to take. Now the procedure of appointment of the auditor. Correct? The procedure of appointment of auditor is this. Every company shall in its AGM appoint an auditor who is an individual or a firm as the auditor. And the period shall be from the conclusion of that meeting till the conclusion of the 6th annual general meeting. And they will have to produce a certificate. So basically an auditor, what happens? First AGM. So from the beginning of the company till the first AGM is the first auditor. From the first AGM onwards, I can appoint an individual or a firm for every 5 AGMs. 6th AGM, 11th AGM, 16th AGM, like that. This could be an individual or a firm, but generally individual will be appointed for one stretch of 5 years. Firm can be appointed for 2 terms of 5 years each. 2 terms of 5 years each. That's what they say. But this fellow should be appointed for 1 term of 5 years. Mind you, it is not up to 5 years, it is 5 years. So this is 5 plus 5. But the beauty is, if for that particular company, if rotation applies, for that company, if rotation applies, we'll see which company rotation applies, then this person whose individual is appointed for 5 years cannot work for the remaining 5 years. And a firm which has been appointed for 2 terms of 5 years, for them also cannot work for 5 years. This is called as cooling period. Cooling period, that's the gist of the story. Coming back now to the procedure. The individual or firm is not disqualified for appointment. I told you they should give a certificate. What should it say? The individual or the firm is not disqualified for appointment. Proposed appointment is well within the limits laid down under the Act. List of proceedings against the auditor, if it is pending against in any court, that also has to be given. So, am I disqualified for appointment under this law or any other law, CA Act, etc.? Everything I should give. And ultimately, all these things will be given to the company. And once in the company, they will appoint the auditor. Mind you, when nothing is given, what resolution is it? Ordinary resolution. Company will give a notice to the auditor also, to the ROC also, ADT 1 within 15 days. Company should give a notice to the auditor and to the ROC in ADT 1 within 15 days. And as I told you, if it's rotation, 1 term of 5 years, firm 2 terms of 5 years you can appoint, cooling period for both will be 5 years. Cooling period for firm is not 10 years, for both it is 5 years only. Rotation under 139(2), applicability, it's applicable to all listed companies. It is applicable to all unlisted public companies where paid up capital is 10 CR. Important, you have to remember. It is applicable to all private companies where paid up capital is 50 crore. What if the paid up capital is less than 10 crore here, paid up capital is less than 50 crore here, but if you have made borrowings from financial institutions, banks and public deposit of 50 crore or more. First condition is it should be less than this 10 crore, less than 50 crore, plus borrowings must be what? 50 crore or more. Then rotation will mandatory apply. OPC and small companies are not covered by rotation. And what is rotation? We have seen already. Other points, any audit firm which has a common partner or a common network cannot be appointed. Right of the auditor to resign will not be removed. So basically, even though I have, can do for 2 terms of 5 years each, or I can continue for 1 term of 5 years for individual, for example, you cannot take away my right to resign. I can definitely resign if I feel like resigning. Next. Removal of auditor. Removal of auditor. So guys, if you see, the first auditor is appointed from 1st AGM to 5th AGM individual, and then 11th AGM, 16th AGM, whatever the case may be. If I remove the auditor here on the AGM date, then it is called removal on expiry of the term. Term is getting over. On the other hand, if I say that the auditor is, can I throw out between these 5 years only? Yes. This is called removal before expiry of the term. Mind you, whether you are an individual or a firm, you always have to be appointed for 5 years only. Just that in a firm, you can have 2 consecutive terms, 5 plus 5. 5 plus 5. For a firm, you can do it. For individual, 5 years. Individual, 5 years. And rotation, as I told you, after 2 terms are over, then again 5 years cooling period. Somebody else will come. But for a firm, it can be appointed from 1st to 6th, and at the end of 6th also, again one more round they can do 6 to 11. Should I keep on reappointing at 2nd, 3rd, 4th, 5th? No. 1 to 6 is 1 term. 6 to 11 is 1 more term. Individual should be appointed from 1 to 6. Firm can be appointed from 1 to 6. And again at 6th, from 6 to 11 again. Got it? It's like that. The term is fixed for 5 years. Term is not 10 years. Term is 5 years only. After that, reappointment must happen. But at every AGM, should I reappoint at 2nd AGM, 3rd AGM, 4th AGM, 5th AGM? No, not needed. So as I told you, removal is what? Before expiry. Before expiry. Before expiry can happen in these 2 cases. Removal of first auditor before his term ends. and removal of subsequent auditor in between any two AGMs. Yes or no? Yes. You see, removal of first auditor appointed by board or shareholders, and removal of subsequent auditor before expiry of the term. So here guys, the procedure is 140 subsection 1, 140 subsection 4 clause 2 onwards, and there is no concept of special notice. Logic I have explained in my detailed classes before. I cannot go into all that logic now. It's just a pure revision session. So board resolution will be filed within 30 days of the board resolution. File ADT2 and RD1. This is expiry, removal before expiry. So it is very serious. The auditor should have committed something. That's why I am going into all these things. Right? So 140 subsection 1, 140 subsection 4, clause 1, 2 onwards, and there is no special notice. This entire thing will be done within 30 days. But when you pass the board resolution, within 30 days, you should file something called ADT2. ADT2 now should be, affixed to one more regional director form called RD1. And the regional director will approve of the same. Within 60 days of regional director approval, you should pass a special resolution. Within 60 days of regional director approval, you should pass what? Special resolution. Within 30 days of passing the special resolution, you should file MGT 14. This is the entire procedure. And 140 subsection 4 clause 2 onwards will apply, where the details will be given to the person. The special notice points, though it is not called special notice, the other special notice points will come. Why is it not called special notice? You can refer my regular classes, in depth I have explained. Now there is no time. Then resignation. Resignation 142 and 3. You have to file a form called ADT3 within 30 days along with detailed reasoning. It should be filed to the company, ROC and C&AG if it's a government company. If you fail to file that, that's the beauty. If you fail to file, penalty of 50,000 rupees or remuneration, whichever is less. Remuneration is 60,000. 60,000 or 50,000, whichever is less. Continuing failure, 500 rupees per day, it can go up to 2 lakhs. What about removal on expiry of the term? Since the tenure of the auditor is over, it is more of a replacement than removal actually. But ICAI uses the term what? Removal on expiry. It can happen at the 6th AGM, 11th AGM, 16th AGM like that. This has to be read along with rotation. Principles of natural justice is discussed in depth in 140 subsection 4. Principle of natural justice is also applicable to removal of auditor before expiry, except giving special notice we have seen. We need a combined reading of 139.2 and rotation also and section 140 subsection 4. What is that 140 subsection 4? We will see here and then we will come back to that. 1% voting power or 5 lakh paid up capital will give a special notice we have seen already. Not earlier than 3 months, not less than 14 days before the meeting to the company. Company will forthwith send to all members not less than 7 days before the meeting. Not less than 7 days before the meeting. It will be given to whom? The retiring auditor. It will be given to the retiring auditor. Retiring auditor is the auditor whose tenure is expiring. That is the 6th AGM, 11th AGM like that. The retiring auditor will give a written representation of reasonable time and reasonable length. That written representation will be given to the company. The company will circulate the representation among members and state the fact that representation is made. So they will circulate the representation among members and state the fact that representation is made. In case the company does not circulate the representation because of company's default or delay, then the retiring auditor can read out the representation at the meeting. The retiring auditor can read out the representation at the meeting. This is called principles of natural justice. However, the auditor knows that is going down. He wants to bring down the entire company. Then what happens if one fellow, he has written some false thing in the representation. So by application of the agreed party through a notice, tribunal will go through whether the representation was false or whether the representation was valid. But if the tribunal concludes that the rights which is given to the auditor in this case, what? Right to speak, right to, read out, right. So first right is what? Right to get the notice. Second right is right to give the representation. Third right is right of having the representation circulated. Fourth right is stating the fact that representation is being made. Fifth right is what? Right to read out the representation at the meeting. So if all these things are there, then if these rights are being abused by the retiring auditor, then the tribunal may order for the company not to send out the representation, and they can tell the retiring auditor not to read out the representation. Most important is, can NCLT give a gag order? Can they ask the auditor not to speak? No. Nobody can ask the auditor not to speak. Right to speak is a constitutional right. Nobody can take that away. So cannot take away the right of the retiring auditor to speak at the meeting. That is the entire scheme of things. Very, very simple. 140 subsection 5, power of the tribunal to order change of auditor. You can change the auditor also. How? Application made by CG, by any other person concerned also, the tribunal may also at suo moto, if there's any investigation, if there's any fraud, then they can change the auditor. The tribunal is satisfied that the auditor has directly or indirectly acted in a fraudulent manner, can order to change the auditor. Appointment of auditor by CG on an order made by tribunal. If application is made by CG and tribunal is satisfied that the change of auditor is required, then within 15 days from the receipt of such application, make the change. So CG will appoint a new auditor. And the old auditor has been removed, is now disqualified for 5 years. For 5 years is disqualified. An auditor shall not be appointed as an auditor of any company for a period of 5 years and directly liable under 447, guilty. Section 141 talks about the eligibility and qualification and disqualification of auditors. So, person can be appointed as auditor, firm can be appointed as auditor. For everyone, you must be a CA with a valid certificate of practice. And if it's a firm, majority of the partners in India must be qualified. If there are 10 auditors, 6 are in India, 4 are in Dubai, you can still appoint. 6 are in Dubai, 4 are in India, you can still appoint them. It doesn't say majority should be in India. They say majority who are in India must be qualified. Means what? 3 out of 4 must be qualified. That's how you should look at it. Qualified means what? Of course, all 4 must be CAs having valid COP. But other qualification points under this section also have to be followed, is what they are trying to tell. What is the disqualification? A body corporate cannot become a, auditor except an LLP. Officer or employee of the company, a person who is in the office, who is a partner or officer or employee of the company cannot do it. And apart from that, other things. Himself, relative partner, having security interest, direct indebtedness more than 5 lakh rupees, indirect indebtedness more than 1 lakh rupees. Indirect indebtedness means guarantee or security. So basically, direct security interest is one thing. Direct indebtedness, if the company, if the auditor owes the company more than 5 lakh rupees, not possible. Similarly, if the company has given loan of 10 lakhs to auditor's friend, Auditor has given guarantee to the company saying that my friend will pay. If he doesn't pay, I will pay. I have given guarantee of 2 lakh rupees. I am ineligible. And mind you, not just that company in which I want to audit, the entire group is what? That group is this, the company in question. Then holding company, subsidiary company, associate company, then subsidiary company of that holding company. The entire group should be taken into account. This is for 141.3, but for this company here, company in question, holding company, subsidiary company, associate company, and subsidiary company of the holding company. In this, one extra thing is there for 141.3, that is subsidiary of the associate. This is missing here. So for 141.3D, what all are covered? Security interest, direct indebtedness more than 5 lakh, indirect indebtedness more than 1 lakh. Security or interest. Security means any shares, preference shares, debentures as per SCRA. As per SCRA. However, can I hold share and be an auditor? No. Can my relative hold shares? Yes. So, extra short, relative can hold up to 1 lakh rupees face value of security. If that exceeds 1 lakh, corrective action to be taken by the auditor within 60 days of acquiring the security. Should ask them to hand it over or give it off to somebody else. Then, 141.3, person or a firm having business relationship. Means any commercial transaction which is beyond arm's length. Arm's length means as if two unrelated people are entering into a normal transaction without any discount, or a discount which is given to anybody else also in the normal business. That's okay. Beyond arm's length means what? If you have entered into a transaction which is like a benefit to you, then you are not allowed to be the auditor. 141.3F, prospective auditor should not be a relative of the director or KMP. Relative definition I have already seen. So if my father is a director of the company, I cannot be the auditor. If my brother is the director of the company, I cannot be the auditor. Reverse relationships are not covered. My father-in-law is not my relative. Let's say my father-in-law is the director of some company. Can I be the auditor of that company? Yes. Because from the father-in-law's point of view, son-in-law is a relative. But from son-in-law's point of view, father-in-law is not a relative. So that's a slightly, lacuna in law which is there that you leave. In the regular batch, we have explained this in depth. This particular chapter can go up to, accounts and audit will go up to almost 30-35 hours of discussion. It's like a revision, so I am assuming that you already know all these things. 141.3G, again, you cannot be in full-time employment elsewhere, and there will be a ceiling limit of maximum 20 companies you can take the auditorship of. But the 20 will not include OPC, small company, dormant company, and paid up capital, where paid up capital is for a private company, paid up capital is less than 100 crore. Logic of 100 crore also I have discussed in class. You just remember 100 crore and go. It's actually a typographical error. Think about it. Anyway, 141.3H, convicted by court of fraud and 10 years, you are not eligible to be appointed as the auditor from the date of conviction. Then directly and indirectly, does services under 144. Other management services he does. That is not allowed. Who's a relative? Already discussed. These are the services that you should not do. If you are an auditor, you cannot do these services. Accounting and bookkeeping services, internal audit services, design and implementation of financial information, actuarial services, investment advisory. This can be a 4-mark question separately. Powers and duties of auditors. Every auditor shall have a right of access to books of accounts and vouchers at all times. All time means business hours only. You cannot call him at 1 AM and say, hello sir, I am not able to sleep. Please give me the books of accounts. Not possible. Then in auditing, if they ask you audit enquiry points, then you can write these things. This is 143. 1. You can write these audit enquiry points. That is in auditing. In law, they will not ask that. Audit report under 143 shall contain what? All information. Proper books of accounts should be maintained. Accounts are maintained as per according to the branches also. Financial statements are accordance with accounting standards. All that audit report will have to tell that. And director is not disqualified under 164. Any adverse remark, etc., qualification, etc., which I have raised, they have responded properly. All that you should tell. Then internal control requirement. Internal control. Internal audit is different. Internal control. Internal control requirement is not applicable for what? An OPC or a small company. Private company whose turnover is less than 50 crore or borrowings from banks or financial institution, body corporate is less than 25 crore. You need not have the internal financial control requirements. This is also important to remember. Fraud reporting, this will come more in auditing than law, so I'll skip that. That full thing will come there. 145. Auditor to sign audit reports, signing and certification. Signed only by the persons appointed as auditor of the company. That is one part. Any other document of the company signed or certified by the auditor shall be signed only by the person appointed as auditor of the company. So if I am the auditor and during the course of the thing I fall sick, etc., one more partner only can sign, not any other chartered accountant. One more partner who is eligible to be appointed as auditor, only he can sign. Auditors should attend the general meeting. So right of the auditor to receive the note, all notices of the general meeting should be received by the auditor without fail. And it is the duty of the auditor to attend the general meeting without fail, either himself or through his authorized representative, who shall also be qualified to be an auditor. So he cannot send his article clerk, he cannot send his audit manager. Why? Because audit manager, even though he is a CA, is working in the firm. Anybody who is an employee, full-time employee, is ineligible to be as an auditor. Here they have clearly mentioned who shall also be qualified to be an auditor. Right? The company may exempt this person from coming because on 30th September he has some 5-6 companies to go. Where will he go? So he should send a letter saying that I cannot come to your company, I'm sorry. So an exemption letter he should take. Right to be heard at GM. So whatever issues relate to you as an auditor, you can discuss at the meeting is what they say. 147 important punishment for contravention. 139 or 146. If you violate anything between 139 to 146, company will be liable 25,000 to 5 lakh, officer in default 10,000 to 1 lakh. This is for company violation, but auditor violation comes here. Violating 139, appointment provisions. 144, handling other prohibited services. 145, signing of the audit report. Mind you, 143 is missing. It was there, it was removed later. What should you do, guys? Refund the full remuneration. And by mistake also, if you have done that, whatever the contravention, minimum 25,000, maximum 4 times remuneration. Deadly. Or 5 lakh, whichever is less. But if it is willful, minimum 50,000, maximum 8 times remuneration or 25 lakhs, whichever is less. Plus imprisonment up to 1 year. And it is plus. You cannot escape imprisonment if it's willful. Apart from that, you have to refund the remuneration. Imagine remuneration is 1 lakh. 1 lakh you have to refund. Apart from that, minimum 25,000 or 4 times. 4 times is 4 lakh. 4 lakh or 5 lakh, whichever is less, 4 lakh. If it is willful, minimum 50,000, maximum 8 times. 8 lakh or 25 lakh, whichever is less, 8 lakh. Deadly. Liability. Apart from that, you have to pay damages to the company, statutory bodies, authorities, members, creditors for loss due to misstatement. A class action suit can be imposed against you. Civil liability, all partners are liable. Criminal liability, concerned guilty auditor under section 447 will be liable. So guys, one more thing, the internal audit, that also we will just quickly see. think we missed that. Yeah, not this, sorry. Yeah, this one. Internal auditor and this circulation, filing of financial statement and other documents. You should file the financial statements if adopted at the AGM to ROC within 30 days. This is nothing but AOC 4. For OPC to be filed within 180 days from the end of the financial year. Adopted financial statements must be filed. What if it is not adopted? ROC shall take them in his records as provisional, and only after their adoption they will file. Where AGM only is not held, then the financial statement duly signed and other documents etc. will be given, and it will be filed within 30 days. Penalty is there. Now this they can also ask you XBRL, Extensible Business Reporting Language, AOC for XBRL. Which are the companies where XBRL filing is mandatory? All listed company and subsidiaries, XBRL is mandatory. All companies whose paid up capital is more than or equal to 5 CR is mandatory. All company whose turnover is minimum 100 crore, mandatory. You have to remember this. And all other companies are required to prepare their financial statement in accordance with Ind AS. Then also it is mandatory. Internal audit applicability. Easy to remember. DPLT formula. Deposits, paid up capital, loans, turnover. For listed company, none of this is matters. Internal audit is mandatory for listed company. For unlisted public company, it is first 25 into 2, 50 into 2, 100 into 2, 200. For unlisted public company. For listed company, it is blank everywhere. DPLT, deposit, paid up capital, loans, and turnover. Listed company, it is mandatory anyway. Unlisted public company, 25, 50, 100, 200. Private company, first two, D and P are not there. For loans and turnover, 100 and 200. 25, 50, 100, 200, dash, 100, 200. You have to check. As far as this deposits, etc. that we have seen, to be seen at any point of time in the previous financial year. All these deposit, paid up capital and all, it's not the previous year, last day and all, any point of time you should see. And listed company, as I discussed, internal audit is mandatory. Internal audit is mandatory. On that note, guys, over a span of 2 days, we have successfully completed a sort of a turbo revision. You can't call it like a full in-depth revision, but it was quite in-depth because every area we have picked and discussed. Rather than doing only important areas, nothing is only important, everything is important. And rather than we could not do other laws, it's okay, you can go through that. But at least company law comes, major portion, 60, 70 marks, 60, 65 marks come in company law. So I thought that I could do it in a slightly thorough manner so that you were able to understand. So go through this video. It is uploaded here in the channel and also on my personal channel. You can check anything. Please make use of it. Ultimately, make use of the resources. Okay. On that note, thank you so much for the opportunity granted to me, and so that I could come and discuss over the span of 2 days. And hope all the very best for your examination, dear friends. Take care. See you. All the best. Bye.